Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
These are some of the key topics that we will be looking into in today's program. First, let's take a look at the energy market.
India's fuel consumption rose in June compared with May, continuing with a gradual recovery as industrial and transport sectors reopened after a stringent lockdown, a government statement issued on Wednesday said. The country's fuel demand almost halved in April to the lowest since 2007 as the country came to a standstill after it went into a lockdown on March 24 to curb the spread of the coronavirus. State retailers' gasoline sales in June rose by about 36% from May to about 2.04 million tons. Sales of gasoil, which accounts for about 2/5 of the country's overall fuel sales, rose by about 20% in June compared with May to 5.54 million tons. However, gasoline and gasoil sales in June are still down by about 15% and 17.1% respectively from a year earlier.
We will now look at the top news in the agricultural sector.
Brazil is expected to export 11.9 million tons of soybeans in June, a 37% rise from the same month last year, as Chinese demand remains strong and ports operate normally amid the COVID-19 pandemic, industry group ANIC said on Tuesday. Exports of corn from Brazil are seen at 774,850 tons in the month based on shipping data, ANIC said in a report. ANIC also raised its annual export projection for 2020 to 78 million tons of soybeans, up from a prediction of 73 million tons in April.
Ukraine's government and unions agreed grain trade rules but not export quotas for the 2020-21 July to June season, which began on Wednesday, with the latter delayed until at least August 10, the UGA Grain Traders Union said. The economy minister said last month the memorandum would include wheat export quotas for the season that started July 1 and that the government planned no curbs on corn and barley sales. However, the parties are still negotiating, leaving the door open for large wheat sales in the coming weeks. Ukraine is the world's fourth largest wheat exporter and harvested 28.3 million tons of the grain last year, but it expects poor weather could cut output to about 25 million tons this year.
Next we have agricultural price moves.
Chicago corn futures extended a rally on Wednesday to their highest in more than 3 months after a steeper-than-expected reduction to the U.S. government's corn acreage estimate. Soybeans and wheat stayed firm after the U.S. Department of Agriculture's closely followed planting report on Tuesday also showed smaller acreage for soy and winter wheat than had been expected. The most active corn contract on the Chicago Board of Trade (CBOT) was up 1.2% by 10:48 GMT at $3.54 minus 3/4 a bushel, after reaching its highest since March 20 at $3.55. CBOT soybeans added 0.5% to $8.86 minus 1/2 a bushel, and wheat was up 0.6% at $4.94 minus 3/4 a bushel.
We will now take a look at energy price moves.
Oil prices rose on Wednesday on a string of positive manufacturing data and a drawdown in U.S. crude inventories, both indicating an economic recovery. However, fears of surging coronavirus infections capped the gains. Brent crude was up 67 cents or 1.6% at $41.94 a barrel at 13:36 GMT, and U.S. crude was up 71 cents or 1.8% at $39.98 a barrel.
Moving on to metal price moves.
Copper climbed to its highest in over 5 months on better-than-expected factory data from top consumer China and supply disruptions in Chile, the world's largest miner of the metal. China's factory activity last month grew at its fastest level since December, while Chile's state-owned miner Codelco shut refinery and foundry operations at its Chuquicamata division due to the spread of coronavirus. 3-month copper on the London Metal Exchange rose to as high as $6,094 a ton, a level unseen since January 23. In official trading, the metal was up 0.1% to $6,023.50 per ton.
Steel rebar and hot-rolled coils futures in China edged lower on Wednesday, as seasonal weak demand amid a slowing in construction activities dented prices in the world's biggest steel consumer. The most actively traded construction steel rebar on the Shanghai Futures Exchange for October delivery inched down 0.06% to close at 3,566 yuan or $504.69 a ton. Hot-rolled coils, mainly used in the manufacturing sector, ended 0.45% lower at 3,567 yuan per ton.
Finally, we have the most recent news on the financial market.
The dollar slipped on Wednesday in choppy trading, with the market having a modest appetite for risk-taking amid generally upbeat US data and improving European economic numbers. The greenback fell against currencies that perform well in times of risk appetite such as the Australian, New Zealand, and Canadian dollars, as well as sterling. In mid-morning trading, the dollar was down 0.3% against a basket of currencies at 97.145. Although the dollar has acted as a haven currency for much of the coronavirus crisis, US fundamentals have played a bigger role recently, meaning it can appreciate on better-than-expected data. Against the yen, the dollar fell 0.5% to 107 yen and 42 sen. Analysts said the yen's rise was safe haven related given the declining stock markets, especially in Asia. The euro, meanwhile, rose 0.3% to $1.1258, after a rally in which the euro gained 6% against the dollar in May and early June. The Australian and New Zealand dollars both rose against the greenback. That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.